Good morning and welcome everyone to the Money Control live stream. Well, who saw that coming, Santo? I mean, Wall Street took a nosedive yesterday with the Nasdaq, the technology-heavy Nasdaq index falling more than 5% in just one single session, wiping out almost weeks worth of, up move that the market has seen, Santo. And this came on the back of a very, very hot inflation data in the US. If you look at our markets also, they are taking that cue from Wall Street. At this point of time, the SGX Nifty is indicating almost a 300-point cut on the benchmark index. Now, what was the reason for the sell-off? Well, the US inflation data for the month of August came in at about 8.3%, which was much higher than the 8.1% that the market was expecting or working with. This clearly now shows that inflation has become sticky, Santo. People were expecting that month on month inflation will keep on, going down. In fact, I mean, it sounds really funny to say this now, but JP Morgan just brought out a report last week itself and saying that, inflation is just now going to roll over and you're going to see weaker and weaker number going ahead. But clearly, inflation has other plans, and now Fed will have other plans. The market was fighting the Fed, and at this point of time, it seems like the market is losing. And I think now the fear is that earlier people were saying that Fed might stop, Santo, the moment rates come to about 3.5%, 3.75%. But now the possibility of more than 4% becomes a big reality.
And yes, CJ, and all this turmoil that you're seeing in the US right now, and it's very hard to believe, although people back in India would like to believe that whatever happens in the US should not really affect us, but it's hard to see that happening, because if you see this kind of sustained sell-off for some more days, obviously there will be some ripple effect in India too. And let's not forget, foreign institutional investors have exposure to markets across the globe, and when they lose heavily in any one particular market, especially large markets like US, it's but natural that they will try to cut their losses by booking profits in places where they are still making money.
And also, this is an end of quarter month. So
yes,
in that sense, that compulsion or impulse becomes even stronger.
So clearly, there is reason to believe that if the weakness in US continues for some more time, we are also likely to get affected.
Well, Santo, true. I mean, if over the past few weeks, the chatter had always been that the only reason why our markets could see some bit of correction, some bouts of profit booking, it would be largely driven by global factors. And this is one of those things that a lot of people were, indicating that could happen. But I think if you look at it from our perspective, Santo, I feel that market participants could utilize this opportunity as an opportunity to bottom fish in this market. Especially
I think that's what exactly they will be doing today.
Yes, I tell you why. I'll tell you why. I think if you see the narrative for the past 6 to 7 weeks now, India as a bright spot has become the narrative in the global economy as well, especially in the context of what is happening with emerging markets across the board. You talk about China, you talk about Brazil, you talk about the Southeast Asian countries, Sri Lanka, Pakistan. The examples are numerous. Things are not looking pretty for emerging market economies, but India at the same time is indicating a more than 7% growth in GDP. Inflation is not, even though it's a little higher, but it's not as concerning as, say, it is in the US or in other parts of the world. And also, domestic consumption is finally showing signs that it's steadily coming back after the hit that it has taken from the pandemic. Overall, the biggest, supporting fact for, Indian market, Santo, is, and this is something that a fund manager recently I was speaking to told me, is that if you look at the earnings growth for corporate going ahead, that is expected to be more than 15 to 20% for the next 3 years on an annualized basis. That in itself gives you enough comfort that any correction in this market is actually a big opportunity.
Well, at this point, CJ, clearly there is no alternative theory that is doing the rounds, and which is why you've been seeing some good strong FI numbers also coming in. But let's also not forget, these narratives can change very rapidly. Just one thing probably that could limit the downside, which I feel, CJ, is that you still have got very strong local flows.
Yes.
Until the time that continues, perhaps, just the brute force of money could at least stop or cushion the fall in the market, which is what we have been seeing in the last few months also, that Indian markets still fared better compared to the markets in the US and Europe. So here's how I would put it, CJ. Big upsides from here will be a very tough ask, is what I feel. But if US markets continue to underperform, we may also see some weakness, but again, a big fall seems a little less. The probability of that seems a little less at this point in time.
Well, Santo, technically, I think if you look at it, a lot of technical analysts out there would probably now see the 17,700 as the make or break sort of a support level for the market. If we do open below that, there could be some bit of buying coming in and support the market, but if the selling continues, then 17,500 then becomes a very crucial support, and a lot of bulls out there will be hoping or see that as a major trigger to start bottom fishing in the market. The 18,000 level, of course, was, the panacea. Everybody was thinking that once the market closes above 18,000, then 18,500 and then 19,000 just automatically will happen. But clearly, the inflation in US had different plans at this point of time. We will have to wait and see whether we reclaim that level going ahead later in this week. That's it, Santo. Let's quickly now move on to some of the stocks that will be buzzing. Yes, it will be a difficult day for, I think, the entire market, but individually there are certain names that will probably be in action.
Well, starting off with Thermax, now the stock is close to its record high. It had hit its all-time high just a couple of days back, and it looks like the trend could sustain. Again, there's been an expensive stock for a very long time, but it has stayed that way. So probably in the capital goods space, I would say this is some kind of a HUL of the capital goods.
Are you saying capital goods is the new FMCG?
In some ways, if you look at Siemens, look at Thermax, look at ABB, look at most of these stocks, they've done pretty well, whereas other sectors like tech and all have they've faltered. So in the case of Thermax, the order book visibility is pretty strong. It's got about 10,000 crore worth of order backlog, plus you saw some very strong order inflows, 1,700 crore worth of inflows in the first quarter, which is about 36% higher. So earnings visibility is pretty much there, and the best part is that CJ, the orders have been coming up from a wide range of sectors, some of the conventional players like refineries, steel, chemicals. In addition to that, the company is also providing green offerings to some of the other sectors like sugars, distilleries, paper and pulp. So of course, today probably you could see some bit of selling pressure here, but this is a stock to keep an eye out for.
So Santo, that's an impressive take on Thermax, which has been, one of the spectacular performers in the market over the past 3 to 6 months. But my concern for Thermax, as you mentioned, I think in the short term is where my concern is, because the stock looks quite vulnerable. If you look at it from a technical point of view, it looks a bit vulnerable at this point of time to bouts of profit taking, and that has nothing to do with the possible sell-off that we might see today in the broader market. But in general, also the technical indicators, some of the momentum indicators are giving a weak reading as far as Thermax is concerned. Also, from a valuation point of view, Thermax is actually trading almost at a 20 to 30% premium to its long-term average, 1 year forward average valuation. At this point of time, it's quoting a PE of anywhere in the range of about 50 to 56 times 1 year forward, which is much higher than the 45 times that it has traditionally traded at. Now, that you could argue that, that is because the earnings growth trajectory going ahead is probably much better than what it has been in the past. But clearly, with such sort of valuation, it will basically tell you that the upside will be rather limited from here. And if you're going into putting incremental capital at this juncture, maybe you're better off waiting for a little while and wait for that correction and then maybe get into the stock. Well, the next stock from my point of view, Santo, today, and I'm actually focusing on stocks today which could be a good bottom fishing opportunity in this market. And the first one is Axis Bank from the banking space. Now, we all know that FIIs love bank, and when they are getting out of the market, they also end up hating the banks. So banks always tend to take the brunt of the selling or the buying that FIIs do, and I would probably be expecting a good downtick on Axis Bank today, given that we would be expecting some bit of sell-off from FIIs. I think, but if you look at the fundamental side of the story, clearly this is another bank within the the private banking space that is doing quite well. The outlook on corporate loan growth, the outlook on retail loan growth remains quite strong for Axis Bank going ahead. They have been building up their retail portfolio. Now it is a major chunk of their overall loan book, and that provides a good bit of certainty and comfort as far as asset quality is concerned. Overall, if you look at the valuations, despite the decent run-up that the stock has seen this year, Santo, valuations still remain quite affordable. And I think if you look at it from a 12 to 24 month trajectory, this is one stock that probably could see some, could be in some people's bucket list today.
Well, clearly banking has been the toast of the market for the last couple of months, and the outlook is so positive at this point in time that investors don't seem to be getting enough of banks. And you've seen some of the names like ICICI Bank, SBI doing really well. And the chatter now in the market is that given that the outlook is still strong, the credit growth numbers have been pretty robust. You're seeing a distinct improvement in asset quality. investors will now try and look for stocks which have not participated in the rally, and that is where I think Axis Bank stands a good chance. It's been among the underperformers, and probably, CJ, I feel more due to technical factors, I would say.
Also because I think generally in banking you will tend to have a pegging order, and I think people are also buying banks in that pegging order. You have the ICICI Bank, SBI first, and then you have the Axis and IndusInd, who have now become second tier in that sense within the investor community.
Well, last stock on my watch list this morning is Jubilant Pharmova. This company now has been under pressure. The stock has been under pressure for quite some time, and for good reasons.
I'm surprised that it's on your list, actually.
Yeah, there are plenty of negatives there. It's been facing regulatory issues. Then there is the pricing pressure in the US. Then the slower than expected growth in the API business, and besides the inflated cost structures also. But the only thing is, the stock has fallen so much, and now it's close to its support level of 330. This is a level from which the stock had bounced back a couple of months back, and it's also its lowest in almost 2.5 years now. The company has said that the margins for Q2 will be almost the same as that for Q1. Now Q1 the margins had fallen quite a bit, but according to management this is the level at which margins are likely to stabilize, at least in Q2, and after that the second half of the year you could see margins picking up. Now a big a joker in the pack, if I could call it that, is the clearance for the Roorkee plant. Now it had got FDI, it's got 6 FDA observations after the reinspection, but there's no data integrity issues or repeat observations. Now if the clearance for the Roorkee plant were to come through, according to ICICI Securities, probably the company could be able to accelerate the timeline for it break even of its generic business. So that is something to keep an eye out for. Yes, the stock has been a big underperformer, but at these levels probably there's nothing much one can lose.
Well, Santo, I think we're just 8 seconds away from the opening bell, and clearly it is going to be a big red tick on the market. I mean, we are expecting at least a 300-point down tick, and let's see. Yeah, it's almost 298 points, and the Nifty has opened 298 points lower, or about 1.6% lower, which is fairly good actually if you compare it to the sort of deep cuts that we have seen in Wall Street and other Asian markets this morning. We're fairly holding better than that, and the Nifty mid cap also down about 1.4% at this point of time. The Nifty small cap
IT has taken a very big beating, CJ, in early trade. That's the index itself is down close to about 3%, and you have TCS and all among the major losers this morning.
Clearly, I think, Santo, those recession fears or the recession chatter again has come back. The entire fear in the market is that the Fed might just overdo it in terms of rate hikes, and that will be a big loss for the US economy. That may trigger a recession. We already know the challenges that the European economy is facing at this point of time, and then let's not forget the joker in the pack, that is the Chinese economy, which is also struggling to provide any sort of support to the global economy at this point of time, and therefore it is no surprise the Nifty IT is down about 3.1%. But if you look at some of the sectors that are holding well, is clearly the defensive names like Nifty FMCG down only 1%, so it's clearly outperforming the market at this point of time. And the Nifty Bank Index is down about 1.4%. Almost all the actually only half of the constituents on the Nifty Bank are actually in the red at this point of time. So that gives you some hope that maybe bank would be the one to lead the recovery if we do see any later in the day. Well, coming back to Jubilant Pharmova, Santo, I think you put it on the plate that technically the stock is looking quite vulnerable at this point of time. Almost all indicators that you would read as a technical analyst are providing an indication that the momentum in the stock is quite weak at this point of time, and it is trading below almost all of its daily moving averages except for the 5-day moving average. If you look at the 50, 100, 200 day moving average, it's trading at this point of time below that level. And at this point of time, yes, 330 is of course the near-term immediate support for the stock, but I would also probably look at the 300 level. I think that level could be really crucial as far as the support is concerned for the stock, and if that breaks down, then you could see another leg of downturn in the stock. Well, the last stock on my radar today, and one that I would be looking out for, is Zomato. The stock is likely to be, it's actually gotten off to a weak start, I think, if I'm not wrong, at this point of time, and that is quite natural given that technical stocks or technology stocks across the globe have taken a beating today. But if you look at it from a fundamental point of view, clearly things have been improving for Zomato, and a lot of people might look at this, Santo, as an opportunity to do some bit of bargain buying on this new age technology name. Fundamentals are robust. The company is moving towards profitability. It has provided a timeline, and I will not be surprised if this is on some people's list today.
Well, CJ, again, this has always been a bull market story. When the markets are rolling, the stock tends to do quite well. But some stocks are like that. In this case, again, it was largely built on a theme, on the hope that the company will break even by, let's say, the last quarter of this current financial year. And at this point, looking at the price movement, it doesn't give too much comfort. You'll typically, if the company is likely to meet the target, you will see some kind of buying in advance, which indicates that you're not seeing that yet.
I think we have seen a good almost 40% uptick, Santo, since the earnings came out. So in that sense, yeah, it has been stuck in that 65 range, 63 to 65 range for a long time.
This is where it's been stuck for quite some time now.
So it's been a lot of trading sessions since where the stock has been stuck in that range, and it is waiting for that breakout to happen so that then it can move towards that IPO price of 76, and that will be a very crucial indicator.
So
for
probably a lot will depend whether the company is able to meet its timeline. If it's able to do that, probably we could see the stock re-rate. But now that the market mood is once again changing, I think people would again move away from hope stories or theme stories.
We still don't know whether the mood is changing, Santo. This could be just a one-day thing.
Well, it could be a one-day thing, of course.
Because people, once you have been convinced yourself that things are going to look great, we have seen that in 2021, every bottom was bought into, and it looks like this market is of that similar nature.
Well, we'll see to that, CJ. But with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, try to have as good a trading session you can on a day like today.